Hey guys, what's going on? Coming at you with my daily 9 a.m. video. Today is Friday. Before I get into this video, make sure you like, subscribe, comment below. I'm really trying to get to 500 subs by the end of this month. So by hitting that subscribe button in the corner down there, it's much appreciated. It really takes 1 second. Today I wanted to talk about Corsair Gaming. Ticker is CRSR. This is a stock that I've been talking about for about the past 5-6 months. It's a really good stock for long-term investing. If you haven't watched my channel at all ever, it's a stock I talk about weekly, I'd say. It really depends on what the market's doing, but I'm a long-term investor. I believe that's the best way to gain wealth in, over time. So that's kind of the trading I practice. So yesterday I bought more Corsair Gaming. Cost base, I bought it at $31.29. So it had a red day yesterday. I just want to take advantage of it. Really in the low to mid 30s. I feel like it's a very strong buy. I do think this stock one day will be, over an $8 billion market cap within the next couple of years. So I believe the market cap's right around $2 billion right now, maybe a hair over. So there's definitely a lot of potential. I do like to diversify. This is really my gaming industry stock. So I hold 16 or 17 stocks right now. I am scaling down a little bit, but this is my gaming stock basically. So I definitely want to be in that segment because I think it in the future will be bigger than where it is now. And that's kind of where I like to invest. I like investing in growth stocks in industries that are going to continue to grow over the coming years. So got to get in a gaming stock for sure. I added 10% roughly to my cost base, drove down my cost base to $34.73. So if you haven't started a position in Corsair Gaming or were interested in it, it's a stock basically, you're getting way below my cost base. I think that's about a 10% downward cost base average than mine. But it's such a good stock. It's gonna really collab with a lot of companies. They have a really good gaming PC, keyboard, headphone, mouses, you name it. So they're gonna probably do a lot with like the online leagues and stuff like that in the future. And I think Wall Street's kind of sleeping on the gaming industry because they thought because of what happened last year, everybody was at home playing video games, but that's really, yeah, that's true, but at the same time, people that like video games are gonna still continue to play video games, so that's a fact. Something that came out in the market yesterday is the inflation numbers. The year over year is really bad, it's 5%. That's what they predicted, so they were about spot on. And it's funny because if you look at all the headlines from yesterday, it's like 5% inflation year over year, 5% inflation year. So actually when that came out yesterday in the afternoon, the market actually did correct down and then it went right back up. So if you just read the headlines, you're gonna, that looks really bad, but it's really not as bad as you think because you can't look at it by the year over year. What you gotta look at it is the month over month. So basically the inflation last month was 0.6%. So obviously last year at this time, basically all the economies were shut down, people were printing money and this and that. However, it's down 0.2% from 2 months ago. So actually the inflation peaked month over month. That's how you gotta look at it, at 0.8%. Well, last month's numbers came out at 0.6. So hopefully, the trend just keeps going down. If it keeps going down, inflation isn't as bad as what you think it is. So as long as inflation keeps going down month over month, it's really something you don't have to get caught up on. Don't look at the year over year because you're almost comparing apples to oranges based on what happened last year. As long as the month over month, so let's just say next month it stays at 0.6 or 0.5. That's good. You're gonna keep seeing the market go up and people are gonna be confused because obviously we printed a lot of money last year, but the inflation, people are either they're really not spending it. So if you don't spend it, you're not putting it into the system, therefore inflation is as bad as what you think. So that's kind of my thoughts in short on why the market finished green yesterday. And it's one of those things where I really think we're gonna get the true picture of how bad inflation is in September and October of this year, like in the fall. So my approach is I have about 25%, I worked at 5% more cash from when I really started deploying a couple weeks ago. I want to stay around 25-30% cash in my portfolio. If the stock market kind of stays stagnant for the next couple months or slowly trickles up, I'm hardly, I'll put in like 10%, 5% here and there every week, but I'm not going to go heavy on anything because the second there's a scare of anything, I want to take full advantage of it. You know, if there's like a 10 or 15 or 30% correction, I want to have a ton of cash to average cost down in my positions. So this is a stock that basically I'm 95% built out. I'm basically where I want to be long-term in this stock, because I've been adding in this stock for the past 6 months. I usually like building stocks out for 3 to 6 months, so I'm kind of at that 90%. So if Corsair went sub 30, I will buy more Corsair gaming, obviously. But if it floats around like the 31, 50, 32, 33, 34, 35, I fully built out. I'm totally happy with my cost base at $34. Obviously, in the beginning of the year, it peaked over 40 for a hot minute. So, you know, I have no doubt in my mind it will be probably an $80 to $100 per share stock in the coming years. So I'm totally fine with my cost base. I'm totally fine with how much money I have in it. But if you're looking to start a new position or get into a new industry, you're not in the gaming industry, now's a great time to start it, in my opinion. So you just got to keep the whole inflation thing in mind. I mean, the treasury bonds are going down. Interest rates are still staying relatively low. You know, unemployment's getting lower, which means obviously, hopefully the supply chains go up or, you know, shrinking in lead times. You know, a lot of things are looking up. I mean, there's not really, in my eyes, what much can make the market have like a big swing down based on what's going on, unless, you know, the Fed comes out and says, hey, we're raising interest rates significantly, we're going back up to 4%. Well, that's going to cause a lot of people, you know, to run out of the market, because, you know, they're not going to want to keep their money in there if the rates go up. It's going to slow down the housing market, which is a good thing in my opinion. But yeah, I mean, it's really one of those things where I can't really, I try looking at all angles, and I can't really see it correcting more than like 15, 20% based on what's going on. As long as, you know, what's going on, you know, the vaccines keep rolling out and, you know, everything's good. We don't have massive flares up again, which, you know, if everyone, you know, like said, I just don't think that's going to happen. But I'm prepared for it if it does, because I have cash on the sideline. But I feel pretty good about my positions and all that. So, you know, starting at cost base or averaging cost down if you own the stocks, now not a bad time to do it, in my opinion. So that's all I got. Till tomorrow, make sure you like, subscribe, comment below. Again, trying to get to 500 subs. That's it. Peace.